What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So as I was looking up details for this video, I came across a couple of fun facts about the macro backdrop that I think are worth sharing. I've told you before that we have quietly exited bear market territory at the index level, and some stocks are clearly outperforming, Tesla being one of them. In fact, this is one of the strongest year-to-date performance the SP 500 has seen in the last 20 years, with only 2019 seeing a better year-to-date performance, while 2013 and 2021 pretty much matched this year-to-date performance. So you can see on the screen here, let me go ahead and fill in the other years, starting with 2004 for full context. Yeah, 2023 is a significantly better year than you are being led to believe. These are not bear market vibes. Also, it's worth noting that it took us 195 trading days last year to finally hit rock bottom during the October low. Since then, the trend has been up, right? The key date here to keep in mind is July 26. Why? Because people have been calling this a bear market rally, right? The thing is, July 26 will mark 195 days of the market rallying upward. Now get this, there has never been a bear market rally that has lasted longer than the decline, right? So something you may want to factor into your plans as you're figuring out where you want to position yourself. Now on to Neo. The stock is not only up 6.39% this week, but it has actually climbed 28.74% since the earning call a month ago. And so in today's video, I'll get you caught up on the major partnership and news that is helping lift Neo, then review the latest price targets, and I'll close with where I now stand on holding versus buying. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Let's start with the June delivery numbers. Neo delivered 10,707 EVs in June, up 73.96% from the May number, but down 17.39% on a year-over-year basis. That said, it's worth noting that total delivery numbers for Q2 amounts to 23,520 vehicles and falls within the given guidance range of 23,000 to 25,000 for Q2 2023 that Neo had previously guided to. That is a welcome bounce back and can be attributed in big part to new model availability, namely the new ES6, ET5 Touring, and the new ES8. All are on the new and improved NT2 platform, as is the majority of Neo's lineup now that the conversion taken place over the last few months is completed. And let's not forget that on June 12th, Neo finally gave in to pricing pressure and lowered the starting price by $4,200 across its entire lineup, okay? And so with the Neo offerings now on its next-gen platform and the price cut, all that pent-up demand is rushing in, which is reflected in the numbers. They also turned what used to be free battery swapping into a paying service. This is a positive and aligns with the promise by the management team to better control expenses in order to help margins. Overall, this was the right move as seen in the improvement in delivery numbers, but also it gave a boost to investors' confidence as reflected in the share price. Another piece of bullish news that dropped for Neo is the new cash injection they just received from CYVN Holdings, which is an Abu Dhabi government majority-owned investment firm. They injected $1.1 billion into Neo. The deal was a total of $738.5 million in cash in exchange for just under 8.7 million newly issued shares at a market price of $8.72. The remaining $350 million worth of shares is being purchased from Tencent, one of Neo's top 3 backers. The reason people did not scream dilution here is because 1, CYVN Holdings has agreed to not sell, transfer, or dispose of any shares acquired in the investment transaction for 6 months after closing. So we're pretty much good until year end. Number 2, Tencent is supplying the remaining $350 million worth of shares from their own core holdings, meaning that they don't have to issue additional shares to cover that portion. And finally, Post-transaction, CYVN will hold 7% of the total share count that NEO trades publicly. The key here is that in order for CYVN to hold onto their seat on the board acquired through this deal, they must also maintain a minimum of 5% of the share float at any given time. This means for us smaller investors that they will not be dumping an excessive amount of shares onto the open market, which ultimately is good for the share price. So in the end, between the price cut and the new cash injection, NEO is doing exactly what they need to do to support a stronger second half of this year and beyond. The expansion continues and there is no slowing down. A good testament to that is the addition of 30 new stores added in June, along with the expansion of their charging network. So all good things as we look forward. Now, turning to analyst ratings, the overall consensus is back to a moderate buy. The rating breakdown is as follows. We have 7 buy ratings, 4 hold ratings, and still absolutely 0 sell ratings. The consensus rating adjustment comes in as a result of 2 new hold ratings being added to the mix. The median price target has dropped to $10.33, which coincidentally virtually matches the 200-day moving average of $10.36. Put more plainly, the trend seems to be reversing, but analysts, though more bullish, are still remaining vigilant and cautiously optimistic. We see that further reflected in a narrower price target range, with the top end of the price range dropping to $13 and the low end now at $7.50. This then brings us to how I'm personally thinking about NEO. I'm not sure that these sub $10 prices will stick past this quarter, and therefore for me, it's time to start buying again. My average sits at $14.23, and it's a good time to help drive this number a bit lower, in my opinion. I told you the last time that the risk reward on a NEO stock was tilted in favor of the stock starting a slow but steady climb. We're up over 28% since then. Now, you can wait for the official "we're in a bull market again" announcement, or you can move earlier to maximize your return. For me, the time is now. But on that note, that is it for me today. A short one. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.